probably tired. Okay, you want to take off for the rest of the day and just enjoy it. So we'll get you through this, as quickly as possible. I got about an hour here to perform some supply-demand techniques that hopefully will benefit you guys in your trading career. All right. So before we get started with any education, what I'd like to do is just run you guys through our disclaimer. Okay, so bear with us just one moment, and then we'll get out to the fun parts. Okay, guys, so this is for educational purposes only. Trading absolutely has both potential risks and rewards. Any trades placed upon reliance on pure financial education is taken at your own risk. Your account can be lost in its entirety at any time. Past performance is not necessarily an indication of future performance. Pure Financial makes no representation that any account will or is likely to achieve profits or losses similar to those shown or discussed. All statements and expressions of opinion made by Pure Financial are the opinion of and its associates and are not meant to be a solicitation or recommendation to buy, sell, or hold securities or commodities. This service is not to be interpreted as investment advice or an endorsement of any security, commodity, future, or personal investment advice. Pure Financial is not a commodity trading advisor or a registered investment advisor or a broker-dealer. Pure Financial may have positions in any asset class mentioned and is under no obligation to disclose the amount of the position or when it was acquired and will not necessarily announce all or even most of their transactions. By participating in this education, you are in fact agreeing to all of the terms above, and you do accept full responsibility for your trading and investing results. So, I know, guys, it's painful. Got to get through the boring stuff to get to the fun stuff. So what we're going to do today is we got a quick PowerPoint presentation. Anytime you're diving into education, I know I get it. It's great. It's fun to jump out to the real charts and the live markets, and we are going to do that here just moments away. So just bear with us just a little bit, and we'll get you guys out there so we can have some fun. But at the same time, education is most important, right? So in other words, I could give you a car, but if you have no idea how to drive that car, it's going to be very difficult to drive down the road, right? So kind of the same concept here. We want to learn about it, and then you can start to apply the concepts to your trading. Okay. All right. So thanks for bearing with me through this. Again, thanks for being here, Josh. Thanks for getting us started. And as always, thank you to Trader Kingdom, who is absolutely wonderful for their content. All right. So hopefully you guys are utilizing as much as they have to offer. All right, so here we go, guys. We're going to talk about supply and demand, and it's how to consistently trade using supply and demand methods. All right, I know that this is a terminology that probably 99% of you guys have heard, and I would say that it's a very powerful method of reading the markets. Okay, so just bear with me here. All right. So in order to understand pure price action, you need to understand supply and demand, right? We need to talk about, what is supply and demand, what does it look on a price chart, and many other key factors that we're going to discuss today. So we just decided, or better yet, we just wanted to talk about what supply and demand is first and foremost, and then we can kind of move forward here. So supply and demand is nothing more than an economic model of price determination in a market. It concludes that in a competitive market, price will function to equalize the quantity demanded by consumers and the quantity supplied by producers. This results in an economic equilibrium of price and quantity. And I just sorry to giggle here, guys, but I'm getting a question here, and I will definitely try and address each and every question if possible. I'm sure I'll miss a few, but unless it's a kind of a pause in the webinar here, if you guys don't mind, just try to hold your questions towards the end, and I'll get to those as best as possible. But do feel free to post any questions that you like. And to answer your question, Joe, no, I'm not any relation to him whatsoever. But I do get that question a lot. All right, as I'm sure that he may as well. But no relation whatsoever. I actually never met the guy at all. Okay, and yeah, so let's we'll continue on. Okay, so supply. It's very simple, guys. We talked about supply and demand being an economic equilibrium, right? So what does that mean itself? Well, it basically means that anything in the economy, whether you're talking about housing, you're talking about the grocery store, you're talking about purchasing a new vehicle, it's irrelevant. It doesn't matter what it is. The balance of supply and demand is always going to act the same in that equilibrium. We got to find the balance somewhere. Now, we'll talk about that balance here in a little bit, but I'll just tell you the balance is not where we want to be. We want to be in areas where extreme supply and or extreme demand are most likely to take control, right? So we want to be in the areas where there's an extreme out of balance, an imbalance in price. That's what we want to take part in. So when talking about supply, you're looking at supply. When it exceeds demand, there's a turn in price action. Now gather, guys, here we're talking about what supply is to the financial markets, all right? Price is driven down due to the quantity of goods being produced and the lack of demand for those particular goods. I know this seems very, very simple, right? It's just a basic concept. But what I want to implore you guys to do is look at the markets no differently, all right? In other words, if you're looking at a price chart, and right here we're going to look at we're an area where supply exceeded demand, therefore it's driving prices lower. So what I want you to start thinking about here on a price chart is, why would I think of a price chart, or better yet, why would I look at a price chart and think anything different than a typical supply-demand thought process, right? And those thought processes go into something like, for example, and I use this in my course sometimes, but if you go out and you're purchasing a home, right? And I just love to use analogies because it really sinks in what we're trying to get across here. So if you really go out and you're purchasing a home, I would just pose a question to any one of you. Would you ever go out and offer more than the value of that particular home? I'm pretty sure that most of you, I don't want to put word in your mouth, so if anyone who disagree, please feel free, but I'm pretty sure that most of you say, no, I wouldn't pay more than the value of the house, right? But I would offer less, okay? And just the same, if you actually own that house, okay, would you go out, so for example, let's say that right here, okay, this is your house and you own it, okay? So now we know that the housing just drops astronomically for some reason, all right? And we don't care why it is, but for some reason we have a huge drop in the value of that home. But then all of a sudden, 6 months later, we're back to those highs, right? Wouldn't you want to become a seller at that point? Simply because you know that there was, the value just plummeted and you're scared of it happening again, right? So then you become a seller. You would never turn around and buy that house. It wouldn't make sense. So the thing that we're looking at here is how to make supply demand on a price chart that simple, okay? What do we look for on a price chart that tells us when to become a buyer and when to become a seller? So we're looking at defined areas in the market to help us know when to get on board. So again, this is supply, so what it looks like on a price chart. We'll dive into this more in depth, okay? All right, demand is the exact opposite, guys. When demand exceeds supply, there's a turn in price action. Price is driven up due to the quantity of goods being demanded and the lack of supply for those particular goods. All right, so if we go out and there's let's just say that 3/4 of us in this room, for some reason, we want to go out and we may need dinner for tonight or something. Okay, but nonetheless, there's a particular meal. Let's just say we're going to go out and buy a pizza. If there are 100 pizzas, but yet there's 500 of us that want to actually buy that pizza, what do you think is going to happen to the price of the pizza? I think we all know the answer to that question. We're going to pay a high dollar for it, right? Absolutely we are, because there's tons of us wanting it, and I'm going to be willing to pay maybe more or less than one of you, and then so on and so forth. It's a trickle effect. So you may be willing to pay more than the next person, and so on and so forth. So the demand is clearly driving the cost of that pizza up. All right, so let's keep it simple here. I know these are basic terminologies that I'm using here, but that's what I'm trying to implement into your own trading. We're trying to get you to understand that the more complex and the more complicated you make trading, then that's exactly it's going to reflect, right? Okay. So let's look at demand on a price chart. What does that actually look like? So here we can see that prices reached an area where the demand clearly exceeded the supply. Therefore, when we come back to this particular area, we have a large rally in price away from it. Okay. So if you think of supply demand, as basic footprints left into the market, that's exactly what they are. Back here, this is telling you something. There's a clear sign in the market right here. We have a drop in price. As we reach this exact price point, there is a very large turn away. So what that's signifying is that the buyers all of a sudden stepped in and took control of the markets, even gapped away from this area. So then we have a very large rally in price. The only thing that as a trader we can look at is the fact that this area of demand did at one point turn the markets with extreme, right? In other words, we showed extreme strength coming out of it for the first time. So the first time we come back to revisit it, why are we to believe that there's anything other than that going to repeat itself? Okay. All right, let's talk about peaks and valleys. Peaks and valleys are simple. They're another name for turning points. Okay, they refer to the top of the area where price turns to the downside after a move up, and valleys refer to the bottom of the area where price turns to the upside after a move down. Okay, you've heard peaks and valleys. You've heard swing point highs, swing lows. Drop-based rallies, rally-based drops, etc. Okay. We don't really focus too much on the terminology. We're just worried about what it looks like on a price chart. But we do know that peaks become areas of supply and are created by a rally-based drop formation. Valleys are become areas of demand. Now, bear in mind here, guys, we're talking about peaks being areas of supply, okay? And valleys are the opposite. They're the areas of demand, all right? And they're created by a drop-based rally formation. These formations are created by the imbalance between the supply and demand. Okay, we can see imbalance is improperly spelled. You guys get the idea. So that's absolutely what we're looking for, as we mentioned earlier. We're looking for the true imbalances in price action. Okay, these are references of peaks. Okay, it's very simple, guys. If you think of peaks, we're just literally looking for a rally, price to base in one area, and to drop away from that. Okay, so we have many of them. We have a rally, base, drop. Another rally, base, drop, and then another one here, and finally one here as well. So many peaks on a price chart. Now, are we just going to go out and randomly start picking out every single peak and every valley and start trading? Absolutely not. Okay, absolutely not. The key here is determining which of those peaks and which of the valleys that we're most likely going to turn from. All right. Let's look at some valleys here. These are just the opposite, guys. Excuse me, of the peaks. Okay, we're looking here at a drop, base, rally away from it. So after a drop in price, you're looking for an area where demand exceeds supply, and then we have a rally away. So this is signifying that there are buyers left in this area. Now, some of you may know this, and some of you may not. What you have to be aware of, guys, when trading supply and demand is that the large money absolutely pays attention to it. What I mean by large money, I don't mean they're making. That's not what I mean. I mean the larger money players, right? The institutions, okay, your hedge funds, these big money traders, the ones that can actually move the market. These guys are not paying attention to a tick chart, okay, and they're absolutely out there. They have orders just waiting to be filled, okay? Literally just sitting on the exchange. And if you ask yourself, well, how does supply and demand truly work? Think about it. If we know that there's demand in this area, after we leave that, look at how we left this area. We left so fast. Don't you think that we left some buyers there? Absolutely. So as we leave very quickly, that means that not everyone was capable of being filled, okay? So that's better for us. So when we come back there, those orders still reside on the exchange, okay? That's exactly what we want to see. That's exactly what we want to see, because the more orders that sit there on that exchange, that means the higher the probabilities that our trade is going to work out in our favor even yet again, okay? Large move away again. So now we've taken a look at peaks, we've taken a look at valleys. What's another reference to those, a terminology, if you will? We're looking at the rally-based drop. It's the same thing, guys. We're basically looking at a peak right here. And as we stated, the peaks are formed by rally-based drop formations. All right? So what you're really learning right now is what supply and demand looks like on a price chart. Therefore, look at what happens when we come back into it for the first time. Clear imbalance in price, right? You're looking at these candles and you're asking yourself, how fast did price leave this particular price point? Okay, we don't care why, guys. It's irrelevant to us why price left this. I don't care if it's home numbers or GDP, or you could have pending home sales, or it's irrelevant. It really does not matter why it turned, did it turn, and how quickly did it leave, right? In other words, if we left so very fast, we know that there's most likely still going to be orders just sitting there that are waiting to get filled. That's what we want to see. Talked about the valleys. We're gonna refer to this as also a drop, base, rally, and price. Okay, so we're looking for peaks and valleys as areas of absolute supply and demand. Okay, what about continuation patterns? Continuation patterns are areas in which price was driven to. Okay, so in other words, it was driven to this price point and paused for a moment, and then it regained momentum. Okay, we look at two price patterns to determine a continuation move. There's a rally-based rally and a drop-based drop formation. We're only going to look at these two formations. Doesn't sound like a lot, but I assure you that's all that you need in the market to understand supply and demand. Okay. All right. So here we go, guys. Rally-based rallies refer to a continuation pattern that was controlled by the bulls. Okay. This can act as an area of demand for upcoming trade setups. And same as we referred to peaks and valleys, for supply and demand, peaks being supply, valleys being demand, we're going to do the same thing here. Rally-based rallies refer to demand, okay, because the bulls controlled this entire formation that we form. Drop-based drops refer to a continuation pattern controlled by the bears. So this can act as areas of supply, okay, for the upcoming trade setups. These formations are also created by the imbalance between the supply and the demand, and the equilibrium is very off in the market. All right, let's look at these on a price chart, and let's say, hey, what does a rally-based rally look like? Okay, we have a rally in price. Begins to go sideways momentarily there, and then we have a continued rally in price. All right, so a rally-based rally formation. Notice we have a rally here, small basing, another rally away. Okay, so as we come back into these areas of rally-based rallies continuing to be controlled by the bulls, then we can take part in those. We also have the opposing, which is the drop-based drop. We have a drop in price, clearly, goes sideways just moments, and then a continued downward motion. All right? As price comes back up, we can see that the bears begin to take control again. Okay? Signifies that there's still an imbalance in price at that particular price point. All right, guys. We're going to look at supply and demand on multiple time frames now. So now you got it. Now you know what peaks and valleys are. Okay, you know what to look for on a price chart. We're looking for 4 formations. I need to grind those in so that make notes or whatever it is that you want to do. But remember, we got peaks and valleys, and we have our continuation patterns, the rally-based rallies and the drop-based drops. So now when we talk about multiple time frames, all right, we're talking about formations that are the exact same. Okay, this is important. The formations are the exact same on all time frames. Okay, the difference is that they hold a much stronger impact on the market in the larger time frame. Okay, so the larger time frames bear a much larger impact on price action, and that's due to the fact that, again, like we stated before, the large money is more aware of the larger time frames and the larger outlook. Okay. Okay, so you want to begin your analysis with a top-down approach. Begin with the larger time frame first, and then work your way down to the time frame that you'll actually be placing the trades based off of. So here we go. We can choose a maximum of 3 time frames, all right? And I'm going to say this heavily. Do not overanalyze a market. And what does that mean, first of all? Okay, what does not overanalyzing a market mean? Because we need 0% subjectivity here. All right, we don't want to go out and question, well, I know that Will said don't overanalyze or this and that, but how do I know the answers to those questions? I'm going to tell you right now. Don't overanalyze a chart means don't go out and look at a daily, a 4-hour, an hourly, a 15-minute, a 5-minute, and a 3-minute chart and expect to make high probability trades. Okay, we absolutely, we want to pick 3 time frames maximum, and we want to trade based off of those. So if we're an intraday trader, which I know a lot of us probably are, it's great, guys. We can look at a daily chart, we can look at an hourly chart, and drop it down to a 5 or a 15. I say or a 15, not both, okay? Just one of them for our entries. And that's it. That's all that we need to truly trade based off supply and demand. So you got to ask yourself these following questions. And these are very, very important. Make notes here, guys. Are we near an area of supply demand on the larger time frame? Okay? So for example, looking at a daily chart, first thing you want to ask yourself is, are we trading against supply demand? If we're butting our head up against a major area of supply, you know that we don't want to go, trying to get long the markets on an hourly chart. Same thing with an hourly. If we're butting our head up against supply, you definitely don't want to be getting long on a 5-minute chart, okay? So you definitely want to be aware of what we're doing in the larger time frame at all times. Then ask yourself, is there a path of least resistance in one direction? Path of least resistance simply means that you're looking for a direction where there's nothing to stop you, okay? So if you have huge red candles, all right, for example, if we have a drop in price and you have just 2 or 3 huge red candles, no basing or anything, then that gives us the belief that we can absolutely turn right back to the upside. And I know that confuses some people because you say to yourself, well, that's very confusing, right? Because after a large drop in price, surely we'll go lower. That's the only thing we can do, right? Showing weakness? No, I definitely don't agree with that. What I would have you open your eyes up to is that this is now giving you a path of least resistance, and it's manipulating 90% of the mass public. Okay? This is why professional traders have the ability to do what they do. So if you think about it, we all need a transaction, right? In order to create a transaction, any one of you, in order to buy the market, you must have a seller on the other side of your trade. In order to sell the market, you absolutely must have a buyer. So we all have to have equal amounts of buyers and sellers in order to make those transactions take place. Now, whoever's left over at the end of that battle, they're going to win the battle. All right? So let's take, for example, if you're in the exchange and you happen to be on the desk and you have 500 buy orders and then you have 800 sell orders, we all know that the sellers are going to take control. They're going to use up all of those buys. Okay? So in other words, they're going to use up 500 buy orders, and then we still are left with 300 sell orders, and they're going to just drop the market. But remember, what did we talk about just moments ago? What happens to those 300 orders, guys? Okay? They just sit there. They're still sitting there waiting to be filled. So when we come back to that area, that's going to help us in a potential trade setup. Okay? All right. So how long have we been trading in the current direction? This is another question you're going to ask yourself, because this is also very important. You never want to become a buyer after a large rally in price, and you never want to become a seller after a large sell-off in price. And this completely goes against the conventional method of trading, but you guys, tell me, okay? I think you all know well enough to know that after a large drop in price, we don't want to go chasing a trade. So it's just putting it in simple terms here. We don't want to absolutely, after a large move in price, we definitely don't want to go chasing after it. So ask yourself, if we've been trading in a northbound direction, in other words, if the price has been going up for a long time, then the last thing we want to do is go in and be a buyer, right? No, of course not. We want to become a seller when we get the opportunity, because price has been driving up for too long. So we want to actually think about maybe the opposing. I'm not telling you to go out and counter trend trade. I'm telling you to start thinking like a professional. Okay? So I believe this is the last thing with the PowerPoints we're going to talk about here. But we want to look at trend versus counter trend trading. Applying the larger time frame supply and demand will add probability to your counter trend trades. All right? Every trend, literally every trend, has an end. Okay, it comes to an end, and it also has a beginning, as we all know. Every turning point is created by an influx of either or. It's going to be supply or demand, right? If we turn higher, then there's an influx of buyers or demand. If we turn lower, there's an influx of sellers. These areas are found on the larger time frame, guys, not the smaller, okay? We got to be aware of that. Trending is caused by areas of supply and areas of demand being apart from one another, all right? They act as a magnet. That's what they're doing. So if you have a lot of supply above, you have a lot of demand below, they're going to literally try to pull price towards them. This is why you hear us say all the time, don't diddle in the middle. All right? Because if you're diddling in the middle, you have no idea which one has the higher probability of working out. They're both pulling, they're both acting like a magnet, so who knows who's going to win, right? We're trying to add probability, not reduce it. All right, guys, so this is the end of the PowerPoint presentation. We're going to get out to some live charts. Hopefully you guys will enjoy this a little bit more. So this is obviously the end. We talked about that. You guys can visit us, and we'll just address this quickly here so we can move on. we're happy to bring this back up if you guys need to, okay? But, you know, purefinancialacademy.com, feel free to go out and check out the website. You know, there's the blog and everything of that nature as well. So, you know, being aware. Also, if you guys have any questions regarding anything pertaining here today or, you know, to do with Trader Kingdom or anything of that nature, as far as that goes, you can feel free to email us at support@purefinancialacademy.com. Phone us in at 213-867-7873. And absolutely go ahead and get started with that free 7-day trial that Josh was so kindly posted for you guys in the left links column. All right? Love to have you guys on board. So let's get started with some live charts. Bear with us. We're going to stop the application sharing, and we're going to go ahead and get you guys out to the chart. Okay. All right, traders. Okay, great. So hopefully everyone's getting, Josh, if we have any problems here, just let me know. Hopefully everyone's getting audio here. 1 second, guys. Okay, I'm just going to get rid of our chart trader here. Apologize for that. All right, so now's the fun part. We've learned what supply-demand is. We know that it's the imbalance in price, nothing more. Okay, we don't want to overcomplicate this at all. Is there an imbalance in price action or isn't there? And yes or no. It's only a yes or no. Okay. Then we trade accordingly. So we're looking for true imbalances in price where the supply clearly exceeds the demand and or the opposite. Okay. So if we go out and we open up a price chart, we're going to notice right here that there was a very, very large imbalance in price. Okay, therefore, I apologize, guys. Let me get rid of these for you. Okay, so a very large imbalance in price. And I'm going to say, you guys will hear me repeat a lot of things because I think that it's important for you guys to kind of, you know, get it driven into your minds here. But you'll hear me say this a lot. We had an extreme turn in price from this exact price point, 13.50 quarter, and we do not have any quorums. It doesn't matter to us why. It's irrelevant, right? This is why we don't go out paying attention to the news. Of course, we're aware of what's going on in the econ news coming out for that day and so on, but we're never going to go out and have a bias on the market. I would absolutely implore you guys not to do that because you will hinder your trading. We got to do the exact opposite. I would rather literally not have any idea about any news, and I would absolutely go out and trade a price chart all day long. It's what we do every day. Okay? So here, we're looking at that extreme imbalance in price. As we come back to revisit that area for the first time, we are a willing buyer. Okay? We're a willing buyer. And why is this? Why are we so willing to get long out of this one price point but no other? Because the chart told us so. Okay? What did we talk about just moments ago? We talked about our valley formations, right? Huge valley right there. So as we come back into it, very nice trading opportunity has taken place. Now, we're not going to dive in so much, guys. We only have an hour here. We're not trying to, you know, teach a complete supply-demand method in 1 hour. It's impossible. But we will give you, you know, little key things along the way as well. Josh was so kind of mentioned before. You know, you can check out our Trader Kingdom. We try to post weekly as often as we can, get you guys out some content there. So you can always check in there as well, and the blog and so on, get a lot of information. But here we are looking at the imbalances in price. Now, how do we know not to take this area? That's something that we cover in our course every single day. If there's any of our clients in the room as of now, they would know that in our course this morning, we specifically stated that we are not looking at short. We said we are not looking at shorting this market. Absolutely not. Even if we come up into this peak, we're not willing to short the market. Okay, and there's defined reasons for that, guys. The beauty in what we do is that there is 0% subjectivity. There's nothing on a price chart that we have to go out and question. Okay, we either see it or we don't, and we'll talk just moments away about what this actually is. Okay, this is being automatically plotted for us, so we don't have to question that either. So we not only do we trade based on supply demand, but it's being plotted automatically for us. So we don't have to go out and say, hey, you know, how do I wrap this zone? Or how do I find supply on a price chart? How do I find demand on a price chart? You just look at the chart. It's already done, right? It's done for you, which is what we refer to as our PFA zoning. So please have a look at that if you're ever on the website there, a little video and whatnot. All right, so let's just continue back, guys. We look at all of these price points, okay? As we come back into them, as we stated just moments ago, we are a willing buyer in areas where demand clearly exceeds supply, and we're a seller where supply clearly exceeds demand. We're going to incorporate the trend into that. Here, one thing that people forget to do, and this is very important, guys, just keep it simple. Scrunch that chart up. Look at that. You see an entirely different picture, okay? Because when we open that chart up and we're so tightly here, we're so right into our areas of supply demand, look at what we do. We say to ourselves, I have no idea what the trend is. Look at this. Okay, let's just draw it out. Who knows what this thing is? Okay, because we know that a trend is determined by higher highs, higher lows, or lower lows and lower highs. But look at what you have. Okay, we have a swing low, higher high, higher low, higher high, and then all of a sudden you get a lower swing low. So this is, in your mind, really going against the trend, right? But then you scrunch that chart up, and all of a sudden, now things become so much more clearly. Now you can see, oh, wait a minute, I can clearly see now that we're remaining in an uptrend. So if we enter back into our areas of demand, sure, I'm a willing buyer, okay? Because if the trend is going to remain intact, then we shouldn't be violating these major swings in the market. All right? Get rid of these drawing tools here. Okay, and hopefully that makes sense. Going out into supply demand, guys, you can literally look at supply demand on any market and any time frame, and that's one of the great things about supply demand is that there's no one market that you can trade, and we'll look at some more markets here in just a moment. But there isn't one. Okay, you can trade any of them, which is again that's great. All right, so let's talk about, while we're on that subject, let's talk about multiple market analysis. Why would this benefit us? Why would we be willing to go out and trade multiple markets? Because if you're truly consistent in supply and or demand, that means that you're a patient trader. You got to wait for prices to come to you. Then you become a buyer. So here we were limit long. All right, this is a trade that we had the ability to get on board this morning, and so we were limit long from the 1353 area. Okay, stops below the structure, and nice trade, but we don't want to talk about that. What we want to talk about is how we knew to get on board this trade. So our trend is to the upside. We have a fresh area of demand. We have no reason not to get long the market as we come back into it. All right. Incorporate that trend. But let's talk about other markets. What if this would not have occurred today? What if we came out and we looked at the S&P and we go, there's nothing. PFA zoning is not plotting any supply, any demand for us. We don't have anything to trade. What about multiple markets? All right. What about the ability to go out? Who in the room do we have? Do we have any Forex traders here? Just with do you guys go ahead and post that in the Q&A there if you don't mind. I'd love to know how many Forex traders we have in there. I'll try to address this question. Yeah, Praveen, yeah, we enter based on limit orders. Yeah, because the thing here, guys, we're predefining our trades. So we know our trades well in advance. Doesn't matter if we're looking at Forex, futures, equities, you name it. And, depending on your trading, the time frame that you're trading, if you're an intraday trader, then a lot of times we know trades pretty much the day before, or during that day we know them sometimes an hour, 2, 3 hours in advance. Yeah, absolutely. So we place trades accordingly. Great question. Excuse me. Great question, by the way. Yeah, all limit orders is how we look at entering. Great, guys. I see there's several of you in here. All right, nice. Good Forex traders. All right, we love to see that. Okay, so let's go out and let's ask ourselves, I don't know, does supply and demand work on Forex? Because I've heard, right, and I'm just using an example now. I don't mean I've literally heard this, but every one of us has. I've heard that nothing you do can work on Forex, right? All these trading systems and this and that talk about how much money they can make and all this. None of them actually work, right? Thanks, Pat. I appreciate that. Pat's pointing out, yes, it works. So thanks a lot. I appreciate that. This is the one thing, guys, that I've found to be consistent. Okay, that's all that we'll say. Is we're looking for consistency, and this is the most consistent method that we've seen, and we've used literally just about everything you could possibly imagine. Okay, been doing this for a while, as I know some of you have. So same thing, guys. We're looking at the S&P, and we go, well, there's nothing there today. So now let's talk about the euro dollar. Okay, let's look at that Forex. I don't know, does it work there? You guys tell me. Look at a price chart, and you go out and tell me, great buying opportunity right here. What about this right here? Okay, it's literally, and this is what we want to talk about, guys. Let's plot something here and go, when did we know about this? All right, excuse me. Okay, when did we know that we wanted to be a seller into this area? Let's go back and find out. Let's crunch the charts up. Wow. Would anyone believe that we knew we wanted to be a seller out of this exact price point back in the beginning of December? Okay, we've known this for 2 months, almost 3, excuse me. For 3 months, guys, we've known that if we come to this price point, we are a seller. So when I tell you that we're predefining our trades, that's exactly what I mean. So we limit short, all right? We're limit short from this area, and that's it, okay? So that's what we're looking for on a price chart, all right? Yeah, I'll take a look at some of the other markets as well for you guys. Sure, no problem. Let's try and address a couple of questions here as I have a moment. So Pat's pointing out the support and resistance, aka the key levels, are very important in Forex too. Man, I couldn't agree with you more, Pat. Yeah, I couldn't agree with you more. One thing that I want to add to your statement there, though, support and resistance versus supply and demand. One of the things that we teach you in our course is that these are extremely different. Now, whoa, that probably throws you back, right? You're thinking, wait a minute, I've heard that support, resistance, supply, demand, same thing. Okay, well, maybe it is for some people, but not for us. We completely go against that thought process, because supply, guys, and demand, they're absolute areas where influx of buyers and sellers come in. You can test an area multiple times, and you can even violate through it and still have an area of support or resistance. But that's not going to happen with supply and demand. When these levels get violated, we are not cutting through candles to find them. Okay? So for example, guys, what did we talk about just moments ago? We said that we're looking for rally-base rally formations, right? Rally, base, rally away from it. Okay, limit long, and then very nice move to the upside. Okay, there we go. So let's continue forward. That's what we want to talk about multiple markets. You really need the ability to go out and do this because to truly find that consistency, we highly recommend, don't just trade one market 100% of the time. If you do, be very, very patient, okay? Because you're only going to get so many trades, and the more, if you go out and start trying to force trades, I just definitely wouldn't recommend that, okay? You got to protect your accounts, and that's not the way to do it. We're all about consistency, not losing finances or whatever. All right, guys, so let's see. Thanks, Dante. I appreciate that. It is awesome. I concur, absolutely. All right, so let's take a look at the dollar. We got someone asking about this. We'll take a look here at the dollar, okay, and then we can kind of move forward in there. So yeah, same situation, guys. We have absolute areas of supply and demand being plotted on a price chart. Okay, we haven't really come up into one. We had a limit sell today. Okay, so we had a limit short today and didn't get filled. That's okay. So we got filled on other markets. Great trading there. And this is the way that you have to go into every single day, and you have to say, hey, look, it's either going to work or it isn't, and I'm either going to get filled or I'm not. Okay, and I'm pretty sure you'll see a difference in the consistency of your trading methods. All right, how about the exits? Dante's asking. So the exits, that's a good question. Guys, and one thing I don't want to do is dive into our methodology, okay? We want to keep this purely educational bound here, and just so you guys are aware, we definitely want to teach you about pure price action, supply, demand. But if you guys are interested in learning exact, I mean, to the T, guys, everything that you need to know is offered in our course, whether it be, I mean, we're talking about exact entry points, exact stop targets 1, 2, and 3 on every single 100% of our trades. We have exact entry, stops, and targets. Okay, so there's no, again, no subjectivity, 0%, all determined for us. So very nice there. All right. So how do we determine the exact order price when the zones? Let's see here. That, and again, that's one of those questions that we'll address in our course. Okay, so we'll talk about a lot of that in our course, guys. And again, a free trial. Happy to get you in there. We'll talk about all of that. All right, and same thing with that, Pat. We'll definitely describe the difference in support and resistance with supply and demand, because it's huge, right? I mean, it's absolutely huge. And I'll just point out one thing quickly before we move on from this. You know, this is an area of what previous support became resistance, right? Okay, so as we come back to this area and to revisiting it, this is an entire area of resistance, right? These lows right here, what they were once support, okay, but then they became resistance after we violating them through. So very different. All right. Thanks for all the great questions, guys. All right. Thanks for all the great questions. Absolutely. Let's get out to another topic before we get towards the end of the session. All right. We talked about trend versus counter trend. Trend trading, we can look to the smaller time frames, and we can apply our supply demand methods on a smaller time frame. All right. Only in the direction that we are heading. In other words, if we're in a downtrend on an hourly chart, then we can look at playing our areas of supply on a 15-minute chart. Smaller time frame, you get more trading opportunities. Okay. All right. So counter trend trades, we're only going to look to the larger time frame. If we're looking to counter trend on an intraday, we're going to look to that 60-minute time frame and say, hey, you know, give us the opportunity, right? Yeah, absolutely. All right. So we've covered quite a bit, guys. I'm going to try. We got about 15 minutes, it looks like here. I'll take a look at a couple of other markets here. I'm trying to see. I know a lot of people probably trade the euro. All right, and there we have the same situation. All right, limit shorts out of our major areas of supply. Here it is again. Okay. All right, so we're basically looking at. We'll address this quickly. Our PFA zoning. We're not going to, you know, not here to try and sell anyone anything. If you like what we have, what we offer, that's wonderful. If not, that's okay too. We just hope that we can educate you and help you in any possible way, along with the guys at Trader Kingdom, who are, you know, so awesome to have done this for everyone. Okay, so but the PFA zoning, guys, we can plot supply demand on a price chart automatically, and we talked about this a little bit, but that's exactly what we're doing here. So we're looking at sell and buys, okay, and it's really that simple. Okay, we don't want to overcomplicate it, just like everything else. We're looking at buy longs and sell shorts. All right, and we're not going to dive into which ones we look to take, because that is covered in our course as well. All right, so we covered that, guys. I'm trying to think if there's anything that I'm missing here. We got the multiple markets. Oh, multiple time frames. We want to look at multiple time frames. Why do we want to do this? Why would we ever want to go out and look at multiple time frames? Confusing, right? Could confuse us. We don't need to confuse our trading anymore. However, as we mentioned before, what you see on a 60-minute chart is going to look very, very different from what you see on a daily chart, right? So notice we are up into areas of supply, sell short the market, but what are you going to see on a daily chart? Okay, could look completely different. All right, and just so you guys know, we wanted to show you that the zoning works on multiple markets, multiple time frames, and so on and so forth. Okay, so we are back into an area of supply. All right. As a swing and position trader, you guys want to look to the larger time frames. Okay, you want to be aware of what's going on in the monthly, the weekly, and down to the daily. Okay, as a position trader, and as a swing trader, you definitely need to be aware of the weekly, the daily, down to an hourly chart. All right, absolutely. Absolutely. Now for intraday, you're going to drop those 3 time frames even more. You're going to go daily, 60, and pick either the 15 or the 5. Okay? You're going to choose one of those. All right. Let's see here. I do have several questions coming through. I'll finish up with the multiple time frame, and then I'll try to address questions the last 10 minutes or so of class. All right, guys. So the last thing we were talking about is the multiple time frames. Being aware in the larger time frame, go back and review the recording that they're doing here for you, and you'll review the slides now to make more sense, because we talked about it. We said there were questions that you wanted to ask yourself. Are you butting your head up against supply in the major time frames? Okay, well, if we're an intraday trader, we're on a daily chart, and we're back into a major area of supply. Do we want to think about getting long the market? No, right? No, absolutely not. We want to think about the opposing, right? Yeah, we want to start thinking about where to become a seller in the market. Okay, then we drop it down and so on and so forth. Without diving too much into our methodology, I think that's pretty sufficient for today as far as what supply demand is. Guys, I thank you for being here so very much. What I'm going to do now is just do a quick Q&A here for about 10 minutes, and then we are going to end the session, turn it back over to Josh and the guys there at Trader Kingdom, and we'll move forward from there. So let's see. If you guys have some questions, just feel free to go ahead and type them. I'll try to get to as many of them as I possibly can. All right, let's see. We did talk about that. No, Mike, actually I don't. Okay, so good question here. So is asking if I trade off a 60-minute chart, then I must have large stop losses. All right. No, actually I don't. Oddly enough, the largest that we go out is 3 points on the S&P. Okay, so that to give you an idea there. But trust me, guys, if you're trading supply and demand, don't expect, and I implore you not to go out expecting to take a 4-tick stop. Okay, it's extremely unrealistic in the markets. The ebb and flow of the markets, it's just not realistic to think that you can go out and risk a micro trade and get large gains off of that. However, we can absolutely look at this on a smaller time frame. Let's go out and look at a trading opportunity from today on the S&P. See if we can drop this. May take. All right, there we go. All right. So if we're here, we are on a 5-minute chart here, guys. So what we had was a buying opportunity earlier in the day. Sorry, guys, a little alarm going off there. Okay, so we've actually had multiple trading opportunities today. All right, notice we form our demand. We come right back into it. What happens? Huge turn away, right? What about when we come back into this demand? Right? Great move away. And over and over and over again, guys. We do this all day long. So, it just is a methodology that is very easy to follow. We're not going to dive into the exact entries and so on, but yeah, a couple of great trades here. Now you're looking at literally doing this on the smaller time frame. You're looking at 2 ticks of risk there. That's very small. Okay, same here. You got about 2 ticks of risk in that trade. The reason that we can do this is because you have limit orders and you know it in advance. That's the key to it, guys. Okay, trust me, it's the key to the consistent method that we've found, is knowing it before it ever happens. And if you have the ability to do that, then you're so far advanced, right? I mean, you're putting yourself ahead of the competition, obviously, because otherwise you're just following current price, and you might as well be a lagging indicator. All right. So what we do, very different from what lagging indicators are. So I could absolutely go in and plot. I guarantee you, I could plot a Bollinger Band or a Stochastics or RSI or you name it. Give me an indicator, and I'm pretty sure that I can plot it on there, and we're going to be oversold here. Okay, I'm pretty sure of it, guys. We'll be oversold down here. As a matter of fact, let's go out and let's see if we are. All right, let's just add a Bollinger here. See if we can get that on the price chart. All right, there it is, guys. Okay, proof is in the pudding. Did any of us need to know that this indicator was going to tell us that we were oversold here? No, because we knew it before the indicator did, right? That's the whole point. If you know what's going to happen before it happens, then you have the ability to be on the pro side of the trade. Okay, so let's get rid of this. I really don't like our charts to be messy. I like a very clean chart. We have our expansion dots here. We simply use these for trailing stops. But outside of that, we're just looking at pure price action. All right. So yeah, there you go, Mike. So hopefully that answers your question. If you want smaller stops, you simply trade on the smaller time frame, and we utilize the trend of it. All right, that's it. One thing that I'll show you guys quickly here is we actually have everything done for you. I mean, literally, we have 0% subjectivity. So what we have here, here's our statement. If we're into a sell zone, okay, and we're trending and our bars are red, okay, so we color coded this to know which trades to take and which ones not to. So for example, here's our, I'm sorry guys, I think I was looking at the wrong chart moments ago. Yeah, I believe I was there. Okay, here we go. Here's the S&P 5-minute, and as you can see, we open up that chart. All right, and there's our buying opportunity. Okay, we formed demand, we left it, came right back to it for a buying opportunity, and then so if you're on a 5-minute chart, you know, again, you're looking from the 64 3/4 all the way up to the 65 3/4. So 4 ticks. Okay, you got a point, and then you go well in favor. Okay, so but we don't want to. We're not here to dive into numbers. That's not what we're about. It's irrelevant about the you know, finances or the numbers, anything like that. At this point, we just want to simply educate you guys. If you want to dive into that, then I'd highly recommend getting into the course, because that's where we'll talk about that moving forward. Great questions. Great questions. Absolutely. All right, guys. Let's see. So is it just price based or volume? Well, it's a lot of things actually. Yeah, there's many algorithms that work here. Okay, so we've created our own logic to do all of this work for us. Yeah, so it actually takes all of that into consideration before. I'm assuming that you're talking about the PFA zoning. Yeah, and so it does take everything into consideration before plotting. Absolutely. Good question. All right. Okay, guys, I will do that. Kulu, sure. I'm happy to take a look at crude. It's a very good market to trade, by the way, guys. Crude oil, very nice. Okay. I don't know. Does it work though? Let's go out and find out. Okay. Let's go out and find out. So what we are looking for are key areas again of supply demand. You notice that we have some opportunities, but they don't take place because our bars are not the right color. So what we're looking for, let's look on the larger time frame. All right. So there we go. There we have it. There's an opportunity that we had right here. Okay. You got to be patient. Let it come to you. If you don't get a trade, then just don't take it. All right. But you know, limit longs, trailing stops, and it looks like you would have just been removed. Okay. Yeah. So now we're looking for remember, color of our bars, right? Okay. All right, guys. Let's see. So great. Yeah, a great market there to trade oil. I'm going to get just a couple more questions, guys, before I move forward. Yes, James, the Ninja, absolutely, Ninja Trader is what we're using. Yeah. Let's see here. Casey, we can. It's irrelevant, right? It doesn't really matter what our settings are, because you won't be able to use it, right? So if you're interested in that, then I'd recommend that you get into the course, because that's you get to use it, right? Unlimited access to that. Yeah, but unless you're talking about something else, but for the PFA zoning, it kind of, what's the point in telling you about it, right? If you can't use it, type of thing. Sorry about that. Okay. Let's see. Continuing on. I don't know, Chad. I'm assuming that maybe Josh, those guys can help you with those questions about the recordings. Yeah, great. Thanks, James. Hey, look, man, I really appreciate it. You know, he's pointing out that it's a really good presentation. I just want to say thanks, man. I mean, you know, this is what we do every day. That we simplified our trading, guys. Oh boy, life just changed, right? We began Sorry about that. Okay. Um, let's see. Continuing on. I don't know, Chad. I'm assuming that maybe Josh, those guys can help you with those questions about the recordings. Yeah, yeah, great. Thanks, James. Hey, look, man, I really appreciate it. You know, he's pointing out that it's a really good presentation. I just want to say thanks, man. I mean, you know, this is what we do every day. We come in and we're going to talk about in the course. You know, we're actually talking about trades and play. You know, in other words, we're placing trades. We're talking about limit longs from exact entry points and so on. But yeah, this is what we do. I mean, there's no reason to complicate anything, and we really enjoy it. And you know, the day that we simplified our trading, guys, oh boy, life just changed, right? We began to have many things to. We realized at that point that wait a minute, you mean to tell me that I can actually go out to lunch today? I mean, I can leave a trade on and go enjoy my day, actually be able to enjoy life. That doesn't seem right, does it? But we definitely can. And thank you. Hey, Will, we have another Will in the class. Thank you, Will. Certainly appreciate those kind words as well. Excellent presentation, he says. Thank you so much. Certainly do appreciate that, guys. Pat is asking the question. Are these scalps, basically? Yeah, I would define that. Yeah, definitely. Because on the smaller time frame, if you're looking at that, that would be more scalping the market. Sure. Yeah, which is, you know, it's not something, you know, that we're huge on, guys. I'm just going to be straightforward with you. We look to the larger time frames because we've been doing this long enough to know that there's no reason to go in and overtrade. And furthermore, guys, how much do you want to pay in commissions? Ask yourself that, because if you can go in and trade less, but you know, I don't know. You ask yourself the question. I don't know how much you guys pay in commissions and all that, but it's just something that you might want to think about. Okay, but the opportunities reside on every time frame. You can go all the way down to a 1 minute chart. We don't recommend it, but you can. All right. Thanks, guys. Several other people pointing out they enjoyed the session. So appreciative. Rashid, the cost of the course. Go ahead and visit us at purefinancialacademy.com via the link on the left side. All the information there. What you're going to do, as a matter of fact, guys, bear with me just 1 second here, okay? I'll bring this over. What you're going to do here is this is the website that you'll be reviewing. And you'll notice that there's plenty of information to get you guys started here. But notice there's a Get Started Now button. Okay, so what you want to do is just go out and review that. And it basically has all of our courses, all the information that you could possibly need is there. So I would recommend going out and just taking a look at that. And so hopefully that answers your question. I see I have a couple of people asking that same question as well. So thanks so much, guys. Yeah, Scott, we do. We trade currency futures. You name it, right? We trade it pretty much. We have, you know, we can look at the Canadian dollar. We can look at the euro. We look at the British pound. Okay, so what we're looking for is limit shorts. Okay, looking for limit shorts, limit longs. All right, guys, over and over and over again. No kidding, right? This is just what we do all day long. Okay, so it's the beauty and simplicity, right? Okay, guys, thank you all. I see there's a few more people posting nice, very nice comments. And guys, again, I can't thank you enough. All right, can't thank you enough. Yeah, Chad, we do call out trades in the trading room every day. Yeah, definitely do that. Okay, guys, without further ado, I really enjoyed this. Hopefully we can get back in here in the near future. You know, maybe do a little bit more education. I want to say thank you so much to Josh, Paul, you know, all these guys at Trader Kingdom for allowing us to come in. I want to thank them for posting our content, and most importantly for providing you guys with the content that they do. I mean, it's pretty fantastic that we have someone out there actually doing this for free. All right, pretty amazing. And all of you guys, thanks so much. It's late in the day. I appreciate you taking the time out, and hopefully you learned something. And we look forward to seeing some of you in the course. If you like what you heard, and hey guys, look, it's all about learning. We're not here trying to sell you anything. We just want you to learn. And if you're interested, if you love what you see, then then we can get you on board for the learning curve. All right. So God bless every single one of you. Enjoy the rest of your day. I'm going to turn it back over to you now, Josh.
All right, thanks very much, Will. Obviously, there were a lot of questions coming in there. We appreciate you going through all of them and helping all the people out. I did want to just remind everyone again, the session was recorded, and an email will be going out tomorrow with a link to the recording. You guys also should check out the free 7-day trial that Will and the guys at Pure Financial Academy have posted. It's a great opportunity to continue to learn more about supply and demand and what Will offers. But that should do it for us here today. Hopefully everyone enjoyed the session, and hopefully we will see you all back here for another upcoming webinar in the coming days and weeks with Trader Kingdom. But until that point in time, hope you guys have a great rest of the evening and take care.